Yo, what's going on, guys? My name is Darren Belzer, and I'm a real estate agent in Steel, Florida. And today, I want to talk to you about what is going on in the economy and how do you fit in? How do I manage all of this? You tell me things getting more expensive. What do I do? What is the secret? Like, is there a secret for me to make money while this is happening, or invest in real estate? And if I do invest in real estate, what do I look for? Well, today's episode is actually pretty short, pretty brief, and it is more about what is going on and what has happened today that, you know, should influence your thinking when you're looking into buying properties or becoming an investor in real estate over the next few years. Sorry. Well, today the Federal Reserve has finally increased the interest rates. What does it mean for you? Well, to make it simple, what they're looking to do is to curve inflation. Right now, we're looking at inflation rates that are above the 2% that they want to be at. We're about 6 or 8% last time I checked. But right now, they're looking to curve inflation rates over the next 2 years to be back at a 2% rate. And the only way they find to do that is to increase interest rates to the banks. And what happens when you increase interest rates to the banks pass on that cost to you. So where the cost of goods has gone up because of the crazy demand and little supply, they're looking to curb demand by making sure that, the cost of borrowing money to get those things is a lot more expensive, so that you as a consumer decides to spend less money and wait for the supply to rise. That means that you curb overall inflation. Now, to make it simple, make it honest, to make you understand what it means, is that when the feds raise rates, it doesn't raise it to you, but it raises it to your bank, because a bank must have a certain amount of money in the reserve themselves to be considered a functioning bank. And when a bank does not have that amount of money reserved, they take that money from another bank, they lend it to another bank, or they lend it from another bank to themselves, and want to pay it back later. But when that rate goes up, the bank is not looking to lose money on this. They basically want free money, so they pass on that cost onto you, the consumer. Now, what does that mean? It means your savings account doesn't appreciate as much. You going to get a new credit card, and the interest rate on that credit card is going to be a lot higher. You're going to go buy a car, or whatever your daily needs, like whatever you spend, whatever money you use to spend over time, the cost of borrowing that money is going to go up. And by doing so, they're just hoping to curb the overall cost or the overall demand and lowering down the cost. The prediction is that the cost will be back to normal by 2024. So we have about 2 years, a year and a half of this happening. They predicted that they were going to raise the basis points by 50. Now they're by 3/4 of a point, by 75%. So by the end of the year, expect another hike, maybe another 25%, or whatever they decide to do to make it happen a lot faster, a lot sooner. That means we're going to, I hate being that person that's going to give you bad news, but we're going to see inflation for the next year and a half. But Darren, you don't do economy. Like, you want to tell me, like, you're a real estate guy. Like, what does this have to do with real estate? Well, since that announcement, you're seeing mortgage rates increase. Just today already, the average mortgage cost went from 5.5% to now being a low 6.1, 6.2s. If you look back in November, you're borrowing at 2.8%, 3% if you had bad credit. Causation of that goes on a little bit more. That mortgage applications went down 29% year over year. There's 29% less people right now applying for mortgages. And that comes at the same time that, housing prices have reached a price that fewer buyers can afford, as a result, you have less demand and more inventory buildup over time. Like right now, certain sections of the country are seeing a rise in inventory year over year. Like California is seeing 15% and all these things. This is not a causation of today, but the overall sentiment of the market in general. Remember that real estate is very local. I'm talking about California, but we're in Florida. Florida, to me, in my personal opinion, Florida is going to follow suit really soon. And that's just as housing demand, new construction demand went up since 2018. And, home pricing is very hard to predict, but you can kind of see that housing is a lagging factor in the economy. We're slow to follow the role of what is happening, um, but there should be a correction coming soon for you to look into down the line. Um, the economist Mark Zunde, I don't know how to say his name, but Mark Zunde said that there will be about a 5 to 10% price correction coming in markets that are oversaturated or overpriced, like Florida, um, and that should correct itself within the coming years. What does that mean? You're not going to see a drastic drop in price of a home, but you're going to see lower prices. Does it mean the affordability changes? Not so much. But to me, it's a good time for anyone that is looking to be in real estate to pivot towards looking into investment. In times of crisis, the most important thing is to have steady income. So what would I do as an investor to get a steady income is look for properties that are undervalued and that can, create a consistent cash flow. You want properties that will create cash flows. You do not want properties that you expect of making so much money off of equity like we've seen for the last year and a half. You want something that will provide you consistent income. So if your target for last 2-3 years was to buy a home and flip, personally, I would not do that. I would buy a home and buy a home that has tenants that are paying rent, looking to multifamily properties, looking to buildings, try to get 1 to 2 doors, 3 doors, just to have that extra income come in more consistently. Now, saying this, nothing is consistent in life. Things do happen, but this is where I would go now, knowing what is happening today. And if you ever need more real estate tips or you have any questions, feel free to reach out to me. You have my number, you have access to my DMs. Whatever you need, I will guide you. Once again, my name is Darren, and I'm a real estate agent in the state of Florida, and I'm here for you. Have a good one.